Mitesh. Well, let's focus on a couple of those earnings. Shriram Finance just came out with its numbers. It's reacting to those numbers. Gaurav joins us to run us through the fine print. Gaurav, it appears that margins are a little bit lower and there are some asset quality issues yet again. Tell us more.
Well, yes, when we talk about Shriram Finance number, now in this quarter specifically, asset quality, I would say it was a little bit of on a positive side because credit cost decline has been higher than what the street is expecting. But what is negatively playing out here is that net interest margin. So let's understand the numbers first. Net interest income increased by 10%. It was below the street's expectation. When it comes to net interest margins, now they have declined almost by 14 basis points on a sequential basis versus the estimates that net interest margins would stay stable, or even they were expecting net interest margins to go up almost by 5 basis points. So that was something which was disappointing. Let's also not forget that management had also guided net interest margins to remain somewhere in the range of 8.45 to 8.6%. On the other hand, when we talk about other income, we did not see any kind of big show there, and as a result, pre-provisional operating profit increased only by 8.5%, which is again lower than what the street is expecting. What remained positive in this quarter is the credit cost. Now, on a calculated basis, credit cost has declined almost by 40 basis points. Now it comes to 1.9% versus the street's expectation of the fall of around 20 basis points on a sequential basis. And this is something which is boosting the profitability. It is up, the profit is up almost by 8%, which was actually in line with what the street was expecting. On the AUM side, we saw again in line set of numbers. We saw a growth of around 17% on a year-on-year basis, and this was led specifically by PV and MSME. Two-wheeler growth was also healthy. On the other hand, we saw a decline in the growth of gold loan segment. So definitely, growth was also something which was not a concern. But at least at this moment, net interest margins is something which is weighing in on the stock price. As we speak, the stock is down more than 4%.
Okay, so there's a margin concern at Shriram Finance in Q1 that explains the fall. Gaurav, just quickly on Bajaj as well, Bajaj Finance, when now that the call is over, you've seen all the notes as well. So is the issue only with the slight asset quality, credit cost, and what they're saying in the a few segments? What is the takeaway, final takeaway on Bajaj Finance?
Right, as you suggested, the issue is specifically because of the commentary that has come from Bajaj Finance. Because when we look at the numbers, now AUM growth is at around 25% on a year-on-year basis. Profit has increased almost by 22%. The numbers seem to be in line with street's expectation. In fact, when we talk about credit cost as well, now this number is also in line with what the street is expecting. What remained actually negative about the stock is the commentary from management. What they have suggested is that there is some stress specifically from two-wheeler and three-wheeler segment and from the MSME segment. They are highlighting that this stress is likely to remain for the next quarter as well. In second half, we may see this stress easing up, but for now, they are also saying that there will be some slowdown specifically in these segments. As a result, when we look at the brokerages, they also became a little cautious. In fact, we have got JM Financial who said that there will be a little bit of room for growth going ahead because the triggers for re-rating are limited. In fact, we also have a bunch of brokers like Morgan Stanley, UBS who maintained their sell rating. So there was a little bit of pessimism from brokerages as well. And specifically on the back of the commentary from management, we are seeing this fall in Bajaj Finance today.
Okay, all right, Gaurav, thanks very much for that. Great to get some perspective on those numbers. Let's discuss this and more with our guest on the show. We have Dharmesh Kant, Head of Research at Chola Securities, joining in. Dharmesh, let's start right there. Two big nifty NBFCs. What did you make of the numbers and what's your call on both the stocks?
Yeah, good afternoon, Survi. Thanks for having me for the show. See, the numbers were fairly in line with what the expectation was, and the contraction in NIMs was expected. The only surprising element was the deterioration in the asset quality in case of, say, Bajaj Finance. Shriram Finance did pose better numbers as far as asset quality is concerned. And this has to be read in line with, see, when there is a deflationary kind of environment, when the inflation is falling rapidly, and then you have an interest rate cut, it's usually not good for the economy, specifically for the lower ticket size kind of a loan. So what we have seen across the financial sectors, be it public sector, private sector, or NBFC space, the problem is coming from lower ticket size kind of a loan. 50,000, 20,000, going all the way up to say 5-6 lakh kind of a loan ticket size if it is there. Because there the income reduces for the rural India largely depends on the monsoon and all. If monsoons are not that deteriorating, not balancing in nature, then what happens is the per capita income of the farmers go down. The reason is, I can give you a small example, a quick example. If you are producing 10 kg of a potato and selling it at rupees 10, so 100 is what you get. And if there is a spoilage of say 20%, 2 kg or 3 kg because of transportation or warehousing because of monsoons, the same 10 rupees potato goes up to 30, 35 or 40 rupees. So the overall income is far higher than the normal produce. This time this has not happened. Till now, there has not been any spoilage or things like that. And that is what is causing the worry. And our collection checks does suggest that collection efficiency ratio is coming down. And the other trend is the provisions have gone up across the board. So whichever financial company is reporting, even if the asset quality is fine, but the provisions are going up, that does indicate there's a pain in the upcoming quarter as well. And that's a reason why with expensive valuation of Bajaj Finance, we are seeing a correction. As far as Shriram Finance is concerned, I think with this correction, one should be buying into that. Always the valuation multiple is always around 2 times price to book, but it's a good opportunity to acclimate the stock.
Okay, got it. All right. Well, Dharmesh, stay with us. IEX has rebounded today after a 30% plunge that we saw in market coupling development. Earlier today, we spoke to Mr. Rohit Bajaj, the joint MD at IEX, who explained that it was too early to challenge the CRC order and clarified that it would impact their business there would be some impact from market coupling. Let's hear out what he had to say.
So bit early days to comment on that, but let me quickly try to rephrase what is there in the order. So CRC issued order for implementing of market coupling for day-ahead market on 23rd July, day before yesterday. And it talks about initiating the process of market coupling for day-ahead market. There are a few more elements in this order where they said that due to shorter time frame available for bid submission in real-time market, and also because of other operational complexities, coupling of real-time market will be considered at a later stage. So yes, there is going to be some impact on our business for sure. But if we see the whole thing, in the recent time, we have seen day-ahead market is not everything for us. There was a time when day-ahead market contribution in our total volume was 80-85%. But today, this number has come down to less than 35%. We would try to maintain where we are. But yes, if the competition is going to be there, definitely there could be some drop. Very difficult to put number to it. Very difficult to quantify this at this point in time. Single entity who is participant in the market, they cannot hold more than 5%. Otherwise, the window is 25%. If there is competition, there could be possible reduction. So I'm not saying that it cannot be reduced. It will take its own course.
Let's get to Dharmesh's view. Dharmesh, what's a little bit of a sticky zone, right? For IEX shareholders, the stock falls 30% in a day. Their moat itself is gone if this coupling issue does take over and it actually gets into play. Your view on it?
We are Dr. Nigel. Earlier how these companies were operating is they were operating as an exchange, as a broker as well. Both the functions were performed by the same entity, and with this market coupling coming into place, what will happen is the exchange part will be created by an artificial entity. All this data will be collated, and then the price differential advantage won't be there. So this definitely will lead to some competition, going up. Competition taking market share from the IEX, definitely that will be there. But the future of this entire business depends upon how effectively this entire synergy happens and how effectively online real-time transactions happen. Because it's not only day-ahead market or term ahead market kind of a synergy, but even real-time market, if it is synergized, then I think the volumes will go up. If you look at short-term market, earlier it was, 10 years back, it was around 8%. It has gone to 12.5%. Of that exchange-traded volume, which was from 1%, it has gone up to 7% kind of a market share. So 5% organic volume growth on the exchange-traded electricity units, still that opportunity size is there. So not everything is lost for the shareholders of IEX. Definitely, the margins will decline. In 2018, they were getting around 5 paisa per unit, kind of a commission, which has come down to 4. Going forward, I do believe that as this pricing mechanism advantage goes away and it's just a volume game between the players, it will come down to say 2.5 to 3 paisa in say next 3 to 5 years. And technology, as has been cited, that it's a challenge. I don't think technology is a challenge. Technology is meant to improve things going forward, and this will be put in place. So for shareholders, they should be prepared for this thing coming. But my own sense is volume will take over. it's a time-wise kind of delay now. You have to wait and see how the competition plays out. And I mean, 2 to 3 years is definitely lost for IEX as far as price action is concerned on the upside.
Guys, market breadth like yesterday is once again terrible. Huh? 4:1 declines to advances. Some actually more. 20, almost 5:1 actually, if you look at the overall NSE listed space. And lots of stuff moving down with volumes, which we'll get to. This source-based information, meeting between Chinese Foreign Minister and External Affairs Minister, is likely we should put those flashes back up.
Ended on a positive note. I think that's what our colleagues in Delhi are picking up. And this is being seen as, some are interpreting this as maybe a bit of a reset for the better between India and China in terms of our relations. And I think some breakthrough on import of rare earth magnets may happen. So, yeah, I guess.
Industry hopeful of some breakthrough. Yeah, but industry has been hopeful for a while. EM took up the issue of rare earth restrictions during his meeting with the Chinese Foreign Minister, and it ended on a positive note. So, yeah, hopefully things will start to ease out a little bit in that sense. And we're talking about the broader market, right? I mean, look at, lots of stuff. I mean, CPCL, Chennai Petro is down 10%, 683 or so. It's a sharp cut. I'm not sure if numbers have come.
Yeah,
numbers came.
There's a loss. Yeah.
Okay, so that is one. Hexaware, we spoke with the management, is down 10%. I mean, of course, it was a week since the morning. Intellect Design is another one, which is down 10. So this mid-cap IT business, yesterday was Coforge, Hexaware, Intellect. Emphasis, of course, was higher. And we've spoken with most of these companies after their earnings. So there is pressure. Nuvama is down 5%. MRPL is down 7%. But I think it had a bit of a run-up as well. So some profit taking in the broader space. SBFC is down 4.5%. Actually, it's a pretty long. So it's not a thinly traded losers list today. And it's for the second day running. Yesterday again, broader markets were looking pretty poor out there. Dharmesh, a lot of stuff is getting sold. Any thoughts on what's happening in this small and mid-cap space, and anything else looking interesting to you?
Yeah, Prashant, good afternoon. See, we were just studying around 119 companies from the basket. And what we figured out that the top line growth was around 5.5% to 6%, and operating profit growth was around 7.5%, with hardly any increase in the operating margin. So that was fine. But the problem is with the kind of commentaries and the analyst call which these companies are, if you're attending what they have said, is not very encouraging. And that's the problem which we have seen with the NBFC space as well, because the lower end of the market has not been performing well. So overall, that selling the pressure has accentuated because most of their valuation multiples were far higher. However, having said that, I think still there are, pockets of green shoots. For example, Sharda Cropchem came out with a good set of numbers. And today the stock is doing well. But again, the type of traction which we are seeing in the entire, agrochemical space, in the specialty chemical space, the numbers have been good. Stock prices may have not performed the way the numbers have come out. For example, Ether Industries also come out with a good set of numbers. So that is one area which, in case of a correction or decline, one should be looking into acclimating your value picks out there.
Sharda, by the way, is the third largest volume-led gainer on the NSE, which Dharmesh just told us. 18% higher on Sharda Cropchem. So, yeah, it's a pretty large move on that one. Actually, there's enough stuff on the upside. Vimta Labs is up 14%. Small name, right? But look at the volumes on Vimta Labs. Humongous. Tattva Chintan, I think, for the second day running. 3 days back, stock was about $700, and Tattva is now 1,150. So Home First is up about 6%. So it cuts both ways. Although, I mean, the number which are on the downside is much longer today. As I said, 5:1 as opposed to the stuff which is gaining at this point.
Just a few more names. Sambhav Steel Tubes. The issue came at around 80 rupees. The stock ran away to around 140 rupees. The numbers look pretty good. The management joined us earlier today. They as well sounded quite optimistic, in terms of their growth numbers. They're guiding for around 300 to 350 crores of the table where there are some. And the word on CPCL, it's surprising that actually those numbers are so weak, though we don't have the inventory loss number. So we'll have to wait for that, and keep in mind that, that is the important number. There was no shutdown. So some clarification from the management is something that we'll be waiting forward to as well on that particular name. MRPL as well as down, CPCL as well in reaction to its numbers. So some clarity will be awaited on that one. Well, we'll thank Dharmesh on that note. Thanks, Dharmesh, for joining in. Wishing you a good Friday evening and weekend ahead. We look forward to chatting
Thank you so
about you
much.
next week itself. For the time being, slip into a short break. We'll get back with Sanjay Parekh, founder and CIO of Soham Asset Managers on the other side.
Okay, welcome back. There's what, markets, of course, not doing very well at all. I mean, 200 points lower, but it's a broader market breadth which has been especially problematic, as we've been pointing out. Numbers keep coming in. GNA Axles is the next one. Margins look better, about 100 plus basis points on a year-on-year basis, though profits are slightly lower. Unusual movers is what we address at this point of the day, at this point of the show as well. Hormuz is here on the wall with that. Hormuz.
Well, earnings reactions and stocks have been taken to the cleaners, but we'll take a slightly broader view today, and especially because of the month coming to an end as well. You start off with JTEKT India, another auto component manufacturer. It's 7% lower today. It snapped a 5-day gaining streak after today's fall, among the top losers on the small cap index. And courtesy of this fall, it is now testing a very important support zone of the 100-day moving average, which is at 133.1. So it's very close to that level. And as of now, the stock is down 15% on a year-to-date basis, and this is going to be possibly the first negative year after 2020. So JTKT is one, Paisalo Digital is the other name, and that has snapped a 3-day gaining streak as well. Before this fall today, the stock was up 15% in 3 trading sessions, and all 5 days this week has seen volumes in excess of 1 crore shares. So activity this week has been on the heavier side. It continues to move around its 50 and 100-day moving average as well, and down almost 35% on a year-to-date basis, and it's likely to be the first negative year after 2016 for Paisalo Digital. Vimta Labs, you just heard Prashant talking about it before the break, and that stock has snapped a 4-day losing streak today, 13.5% higher on the stock. Very heavy volumes today. Almost 95 lakh shares have been traded so far, a 20-day average of just 5 lakh. And as a result of this, the stock is up almost 30% in the last 4 weeks. And courtesy of this move, the stock has turned positive on a year-to-date basis as well. So after this surge that it has seen in the month of July. Now, Newgen Software has been sulking ever since it reported results last week, and it continues to sulk. This is the 7th day of losses today. It came out with results last week, and ever since it has not gained in a single session, down 2% today as well. And it's down, it has halved so far this year. It's 50% fall this year already, and this is the worst calendar year that the stock is likely to have ever since it listed back in 2018. And between 2023 and 2024, the stock is up almost 10x. So it also shows that it's coming off very elevated levels as well, the run-up that it has seen in the last 2 years. And lastly, Cupid is the last name on this list. The stock is up moderately today. You can take that as a win considering the broader market breadth. But the stock is up almost 40% in the month of July. The stock has almost doubled in this year so far in 2025. And it's between 2022 till date, the stock is up almost 12x. At the start of 2022, the stock was at 12 rupees. Today, it stands at around 150. So plenty of stocks being taken to the cleaners, but there are some pockets of winners emerging as well.
Okay, as always, it's an interesting bunch with Hormuz. Wakes us up. Hormuz, thank you very much for that. Not that we are saying we are dozing off, but I think we are. It's a good.
Charges us up, Hormuz, yeah.
Recharges us. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers. Sanjay, good to have you with us here on the program as always. Appreciate your time, it's good to speak with you as well, Sanjay. I was looking through your portfolio and I found one stock which perhaps is new. Maybe there are more. I could spot Oswal Pumps, which is also a recent listing, Sanjay, which finds its way into the portfolio. So tell us a little bit about it. And it's like, there's Shakti Pumps, which I guess is in the same space. Why do you like this one? Why do you own it?
Yeah, so one is, this company, as you said, got listed, IPO price was 614. Immediately after the listing, we could add at lower levels, so that was good. Basically, the opportunity in this segment is very, very large. There are almost, the opportunity can be as large as 11 crore pumps, either not having pumps, farmers not having pumps, or they are running on diesel sets, or the pumps with the grid connected, which can eventually move to solar pumps. So the pump manufacturing part was smaller, but with the solar modules getting attached, the opportunity is pretty large, because an average pump for a 3 HP size is around 2 lakh rupees. And this player is completely integrated. It makes its pumps, it makes it motors, the connectors, and the module. And last year, before raising the capital, they had a 400 crore net worth and 260 crore was the profit last year. So that was as high as that for ROE. So the return ratios were very, very good. Even after the capital raise, even if you take lower margin, the return ratios can be in mid 25% or so. So the fixed capital intensity is low, but the working capital intensity is high because it's B2G. The dependence on state government for payment is there, and there it will be ranging from 150 to 160 days. But the fixed asset turn can be even 8 times, 10 times, So the return ratios are good. The opportunity is large. This player is completely integrated. They will be on net cash, and it will only get better despite the need for working capital, and the growth will be very high. So, and it's a very large player, almost the second largest player, and extremely efficiently run. And as I said, integration, because of the integrated nature that they have, and they want to keep doing better and better, the margins are as high as 30%. But even if you take 25-26% as a sustainable EBITDA margin, there is a clear runway for growth. And the market cap when we bought was 7,000 crores. Hopefully this year they'll do 500 crore EBITDA, next year 700 crore EBITDA. So in this market, we found it to have better character of the business and very reasonable on valuation. And the risk, as he said, is it's a B2G, so dependence on government for new orders and continuing subsidies and the payments that you need to collect from them is always there.
Hi, Sanjay. Great to have you on. Good afternoon. I wanted to discuss two of your holdings and whether recent events at all change your view in any way, or what the investment case continues to be. So one is Axis Bank, and we saw what happened with this whole technical adjustment and the way they've changed their NPA recognition process. Whether that kind of made you rethink it all, because I think it's one of your largest banking holdings. And the other is Bajaj Finance. Nothing wrong with the growth, but today the market's very upset, saying, but they're guiding for some stress in MSME, in two-wheelers, etc. So pretty sharp reaction. You think it's overdone on Bajaj Finance? But what's your sense? And a quick word on Axis as well.
So Axis, yes. I mean, I don't think it was technical write-off in all jargons. According to us, it's a clear recognition of the NPA that they should have done, and they rightly did it. More than that, I think, the balance sheet is very, very strong. That's not a problem. They're actually very, very conservative. They have a buffer which they're not using it. But just that growth, the trinity of growth, getting the capital, I mean, since the CASA, right, and, the NIMs, the whole trio, it has to fall in place. And that is where, and then, of course, also no asset quality not deteriorating. So what our sense is that they are clearly tilting towards asset quality not deteriorating and taking a view that it's okay to have less growth or less profitable growth. So that is where growth is not as much as they should have been. And that is where it's a little disappointing. But I think, that, as I said, asset quality is in place. We are very hopeful that slowly and steadily the growth will revive, and then ROEs would look better. The most important thing is what is in the price. You get Axis Bank at 1.3 times, which is almost very, very reasonable. And that's where we would want to, even if you take, 1.6, 1.7, there's room to money to be made, and hence we own 4% of it, which will continue to grow.
And Bajaj, any concerns, or you think this is a one quarter, not too much to...
Bajaj Finance was, certainly from the lows, you saw the run-up, which was quite well. It's done exceptionally well, in fact. So, now valuations are not that cheap, You take, you're just looking at 24 times on 27, you get a target price of 10,000. On price to book is also around 4.3, 4.4 times. So on that 1,000 rupees of target price. So it is not cheap. Yes, they said that growth would be in the range of 23-24%. And MSME and SME, they're very, very transparent and honest. And that's where they said we want to watch it. So we would, I mean, they're the best in class of governance, transparency, which is very, very good. And they did say that give us one quarter and we'll talk about growth and asset quality as well. But for now, it looks this way. So we are okay. We have a small weight because we reduced the weight because of valuation, not because of the results earlier. And at the right time, we'll actually increase our exposure to Bajaj Finance, but that would be much lower. not at the current price.
Okay, got that. Sanjay, just hang on. We'll try and squeeze in some more questions in just a bit. But quickly, let's head across to our F&O desk and see what's the latest action like. Mangalam.
Well, there is a fair amount of selling that we're seeing in the market, but that selling seems like it is contained at a certain level. At lower levels, the Nifty is finding some support. The question is still what point? Because if you look at it, the Nifty Bank and midcap index, every time they've made a bit of an attempt towards an up move that has been sold into. But lower levels, the market's holding on so far. So July 21st low, what it broke, 24,882, and today's low of 24,806. It's been meandering between these two levels on our market itself. The India VIX, which was at levels which were factoring in complacency at around 10, that has spiked. So that's telling you that, it's making the option writers a little more active in today's trading session. But you corroborate that with the put-call ratio on the Nifty, which is now at the lower end of the band at 0.7. It tells you that the option writers are more call writers than put writers. In fact, just as we speak, we've seen a fair amount of action at the 25,000 call and the 24,900 call, both of them telling you that any sort of up move that we see on the Nifty beyond 24,950 thereabouts, there could be some selling that would take place. Put writers earlier had written the 25,000 and the 24,900 put. Now it's the 24,850 put. With the markets moving lower, the street believes that maybe the next leg of support that comes in, if we were to break below that 24,800 mark, would be closer to 24,750, 24,600. On the way up, the 50-day moving average of the Nifty, extremely important to cross as a resistance. But on the way down, the 50-day moving average of the Nifty Bank as well is equally crucial to track. A lot of stocks on our radar. APL, Apollo Tube, seeing some long positions being unwound after a big gash that we're seeing. Sona BLW, the family drama that is taking place right now, as a result of which the stock is at the low point of trade, some short positions being added out there. And ABFRL is a stock which is very close to its market-wide position limits when it comes to open interest. So open interest is close to 93, 94%. If it does go across that 95% mark by day's close, then we may see that stock come into F&O ban. But the stock that is likely to come out of F&O ban today with a fair amount of certainty is IEX, because the open interest now is at 77%. Remember, below 80%, the stocks usually get out of F&O ban. So with the kind of up move that we're seeing on IEX, now in double digits, after a big cut that we saw yesterday, the stock mostly likely to come out of F&O ban today.
All right, Mangalam, thanks very much for that. That's the latest from the F&O desk coming through. We'll take a quick break here. We're going to come back. As always, get you what to buy or sell today for a reverse trade. When you come back on Monday, short-term trading ideas with our technical experts.
Welcome back. Well, the markets, trying. There is some kind of a pullback. At least the lower levels are getting defended. By the way, you have Laurus Laboratories that's delivered its numbers. The net profit number looks good, and we'll wait for the commentary, which in the past has sounded quite optimistic. So let's see what's that number. Net profit number improving. In the last few quarters, actually, they've got their act together. Revenue growth of close to around 31%. So that's good. Let's wait for the margin number, because that dwindled a little bit for a few quarters. And post that, you had the stock that saw a sharp correction from that ballpark, 500 odd mark. It went down to 300 rupees odd. But as they've got the act together and they've been guiding for better things, better times ahead, we have seen that the stock has bounced up as well. Currently, it's holding higher. We'll wait for the margin number. For the EBITDA number, that comes in at, that number goes down as a beat. It's Laurus has now started to outbeat. There were quarters where, in fact, they were, undershooting. Margins are at around 24%. I think that would be the highest that we've seen in multiple quarters. So we'll have to see whether or not there is a one-off or anything. But otherwise, these numbers look very, very good. And if I have to pull it up, I've not seen margins like this of 24%. The fourth quarter was 24% odd. The street was wondering whether or not it's a flash in the pan. But it appears they're getting back to these numbers of around 24% after a period of close to around 3 years. Because last time around they were doing this run rate was in December 2022. So good going out there. The stock has already seen a bit of a run from the last quarter to this quarter. But these numbers go down as a beat. Mitesh Thakur joins us back. Mitesh, any calls that you have for us? And we're analyzing Laurus Laboratories on the fundamental basis, which the numbers look good. Do you have a technical call on it?
Laurus, certainly long-term charts are excellent. We kind of identified the current leg of up move around the 615, 620 mark, and the highest ever of the stock had traded before this move happened was way back in 21 when we got a closings of around 700 on the monthly charts. Now we are beyond that. So maybe, this rally started from 620, gone to about 840, 850, and maybe you'll get a pullback. But I think on the long-term charts, this looks like a stock beyond 4 digits, and therefore any significant decline of 5 to 7% would be a welcome buying opportunity. People are holding should hold on to this.
I think Mr. Chava's number on margins, the promoter of Laurus, his number has been that 25%, that we'll get to 25%. He's been sort of talking about that for a while, but I think now he's closer to it at the 24 point something percent number. More on this later. But another pharma name which reported is Cipla. And Vinny's here with details on this one. Vinny, take it away.
Hi, Cipla reported a good set of numbers this time, especially on the margins and the profitability front. It was a good number. Revenue, a slight bit of a miss versus what the street was expecting, as well as what we were expecting at CNBC-TV18. So revenue growth of just 4% year-on-year basis. Margins have come in at 25.6%. Profit growth of approximately 10%. Now, factors that come into play. India business, how did that do? India business saw a growth of around 6% on a year-on-year basis. Slower growth was mainly due to the respiratory side of the business, as well as anti-infectives versus other therapies. These two businesses saw a bit of a slow growth in Q1 FY26. US business, obviously, it came in at around $226 million, which was slightly in line, we could say, with what we were estimating at CNBC TV18. Lanreotide, that was a concern coming in for the company in terms of market share. There were supply chain issues and challenges that were there. Now, that has been solved, and Lanreotide market share has come in at around 19.5%. The company has spoken about how their launch pipeline for the rest of the year for FY26 is quite exciting. They have a lot of prescriptions, especially the acute segment, where most of the business comes in from. That was a bit lower in terms of growth, and that is why India business saw slower growth this time. But for FY26, they're expecting good growth coming in there. So 8 to 9% by the end of the year is what they expect to achieve in the India business. Currently, it was 6%, so they will be back to that 8 to 9%. Other than that, Braxin, generic Braxin in June, which was the export data that came in, Cipla has managed to see some sales coming in on that front as well. So that was a positive over there. And all in all, good set of numbers. GLP-1, they're seeing a big opportunity coming in for the company, and they would look at maybe innovators as well as more launches coming in on that front.
Thanks very much. Very quick one. Mitesh, sorry, we didn't ask you for your specific trades, stock trades. You want to just run us through them?
Yeah. I have one STBT and one BTST call. On the buying side is Apollo Hospital. That's one stock which is doing very well in a weak market. So BTST here with the stop just below 74.50, 74.48. Look for a 7,500 kind of a target, for tomorrow. And on the negative side, on the sell side is in copper, which I would suggest taking STVT sell positions with a stop at 263 for targets of around 255 for tomorrow.
Got it. Okay. All right. Thanks a lot, Mitesh, for joining in. Well, let's welcome Sudeep Bandyopadhyay, who joins out on the show. Hi, Sudeep. Good afternoon. Good to see you. When it may be Daru over the weekend, but it's Dawa for now. Those stocks are doing well. Cipla and Laurus, both of them doing well. Laurus, in fact, for third quarter running, the margins have held above the 20% mark. And for the second quarter running, it's holding at around 24%, which is after a period of many, many quarters. Your view on both these two names, and which one do you like?
Well, I think I do like Laurus. This company was somewhere in between. They lost the way and they were wobbling. But things have started improving, and last few quarters have been pretty good. Even this quarter, I think you can't find fault with the numbers. Pretty good number on top line, bottom line, margin. I think they've started doing the right things, and way forward should be good. Management had always indicated of an aspirational margin of about 25%. They're very close to that, and I think Laurus is one company which I'll be watching carefully. I think valuation is not cheap, but I think from a long-term perspective, it does look good, provided they can maintain momentum. There's nothing to fault at Cipla as well. I was, watching the US business, and I think there also they have been by and large close to what was being estimated. So yes, even Cipla is good, but if I have to buy one, I'll go and buy Laurus.
Okay. All right, so Laurus is your pick over Cipla, so they've got that. Just stay on, we'll come back to you for more questions. But let's address those important updates that we had on the screen just a while back with respect to India-China relations and what perhaps is the next step on the whole rare earth magnets issue. We have both Ashmit as well as Parikshit joining in with the latest updates that they're picking up. Ashmit, let me come to you. I mean, as far as engagement with China is concerned, I don't know, too early to say that there is some sort of a rethink or maybe, a move to reset to an extent. What are you picking up?
Well, electronics industry is something that, in fact, has long been crying that, look, it's not just the auto space that's getting affected. Electronics players are also getting impacted due to these Chinese restrictions. Now, we raised these questions within the government, and what government officials are telling us is that given the size and scale of the electronics industry in China, there has to be some engagement, there has to be flexibility in terms of engaging with Chinese entities, with Chinese players. In fact, the government officials tell us is that overall, more than 60% globally of electronics manufacturing sits out of China, sits out of Beijing, and therefore engagement with Beijing cannot be avoided. Now, these statements coming out from government officials come on the back of three very interesting triggers. Well, number one, let's bear in mind that only as early as last night, we saw Dixon announcing that they have managed to get the government's blessings and the government's approval for a JV with a Chinese entity called Longcheer. So we're already seeing this engagement translate into action. Dixon already getting an approval from the government, from METI. Number two, bear in mind that only recently we've seen travel by the Indian foreign minister to China. And it is on the back of that we began to see relaxations like we did in the form of visas being allowed to Chinese tourists. So there is already some amount of thawing of ties, perhaps, some amount of engagement that we're already beginning to see. And let's also not forget that at this time, with the industry reeling under the impact of restrictions from China, there is already solutions being worked out. METI is already in conversations with the Ministry of Electronics, with the Ministry of External Affairs. They're discussing how, in aspects such as rare earth, perhaps components can be imported to beat.
On rare earth, Ashmit, I'm so sorry butting in over there because we're running into market close as well. But specifically on rare earth, I really want to quickly hop across to Parikshit. Parikshit, you've been picking up inputs from your sources as well in terms of this meeting that the External Affairs Minister had with the Chinese counterparts recently. So, I don't know, is there any hope on the rare earth issue?
Well, this meeting between Chinese Foreign Minister Wang Yi and Indian Foreign Minister S. Jaishankar took place in Beijing on the 14th of July. This was the first foreign ministers meeting in Beijing after the Galwan clashes, and the issue of rare earth restrictions was raised, and India urged the Chinese not to put these restrictions and barriers on trade, so to say. We believe that the meeting ended on a positive note. There were a few asks by the Chinese side. One, to give permission to set up plants in India by Chinese companies, free movement of people, and border disputes should not be allowed to derail the larger relationship, and we should keep on talking. So we're already seeing some movement in terms of JVs with Chinese companies being cleared. Visas for tourists is already being allowed now. So the industry is confident that there may be some positive messaging on the rare earth front in the coming few months. As of now, the situation hasn't changed, but the hope is that this meeting between the Chinese Foreign Minister and the Indian External Affairs Minister will lead to something positive.
All right. Good to get that update. So basically, trade is in that sense the great leveler in a way, at a slightly philosophical level. But as Parikshit said, obviously it's going to take time, it's going to take nuanced negotiation, but this is the general direction of travel as far as India and China is concerned. Parikshit and Ashmit, thank you very much for joining us with that. Just a quick programming note for our viewers as we slip into a break. As the workplace transforms, so must leadership. In the Bengaluru edition of Future Female Forward, Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live on the 29th of July, 5:30 p.m. onwards, only in CNBC-TV18, CNBC.com and, of course, the YouTube channel.
Welcome back. Well, a couple of stocks actually are catching your attention. I was looking at the open interest as a percentage of market-wide position limit. And earlier today in my F&O chat as well, I had mentioned that there's a possibility that IEX comes out of the F&O ban. Going by current reading, 3 minutes before we close, it appears that's probably the case because it's done enough. Currently, it's around 75-76%, sub that 80% limit. The other one is Autumn Investments. Nimesh earlier today had put out that there was a large trade that took place and institutions had bought. The stock was down, I think, 18%. Now it's down 2%. So big recovery from the low of the day. The big number, though, that we're going to be looking forward to over the weekend is Kotak Mahindra Bank. Gaurav's back to run us through the big numbers. Gaurav?
Well, yes, when we talk about Kotak Mahindra Bank, we have already seen a positive surprise in advances and deposits, where we saw growth of around 14.5% on a year-on-year basis. Now, considering these numbers, Street is not expecting any kind of negative surprise, at least from Kotak Mahindra Bank. When it comes to net interest income, they're expecting around 7% growth. Now, this translates into net interest margin compression of around 18 to 20 basis points on a sequential basis. Let's not forget, in the last quarter, Kotak Mahindra Bank enjoyed 4 basis points extra because of the accounting policy, and that is the reason. If we exclude that, 15 to 16 basis point of fall is what we're expecting. When it comes to operating profit, we're not expecting any kind of jump in other income, and as a result, operating profit may increase just by around 3% with some positive bias. When it comes to asset quality, now here we are expecting around 10 to 15 basis point of easing in terms of credit cost. We are not expecting any kind of slippages, any stress in the recent fresh slippages, and as a result, profit. Now, when we look at this number, it may decline almost by 2% on a year-on-year basis. But apart from numbers, we will be watching out on how the commentary is going to be on the growth front, how they see advances growing, how the NIMs are going to be as per them, because let's not forget Kotak Mahindra Bank has taken the deposit rate cut higher than its peer banks. And third thing to watch out for is the outlook on the asset quality. Now, that is also something that we will be keenly watching out for as how the management commentary is going to be. But all in all, good set of number is what we're expecting from Kotak Mahindra Bank this quarter.
Okay, all right, got it. Thanks for that, Gaurav. So, finally, it's been a string of bad earnings. But you tell us, anything that stood out, anything bright this week where you are thinking of buying the stock?
Well, I think, Surabhi, I continue to remain positive on cement, and I've been talking about cement for quite some time now. And look at the cement company numbers, whether it's Ultratech, Dalmia. I think pretty much the entire cement pack is turning out good set of numbers. And look, remember, this is a kind of a monsoon season. So I will be very keenly watching the progress of cement over the Q3, Q4. We will definitely see a lot of good numbers and a lot of activity in cement. So that's one place. And remember, this is also Trump proof. So the tariff tantrums doesn't derail their progress.
Okay. All right, Sudeep, thanks very much for that. Well, we are down to the last couple of seconds of the week's trade. 230 points gone and ending at the day's lows, also ending